Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our AI and Technology Conference. The next presentation of the day is from capAI. Please note, you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome Professor Ranjan Nag, Executive Director of capAI, which trades on the OTCQB venture market under the symbol CPIQF and on the LSE under the symbol CPAI. Welcome, Ranjan.
Thank you very much for having me. Good afternoon, everyone, and thank you for being here. My name's Ranjan Nag. I'm CEO, Executive Director of capAI. What is capAI? CapAI is publicly listed both on the LSE, CPAI, and on the OTCQB market, CPIQF. And what we are is an AI platform company building scalable IP, intellectual property, across both media and longevity science. They sound different, but I'll talk about how they're actually very, very similar. And the key thing is that we're trying to do it in a capital efficient and disciplined way. I'll explain what we're building and how we structure it and to manage both risk, but also create what I call asymmetric upside. So bigger upside than we do downside. I'll let you read the standard disclaimer and on forward-looking statements, forward-looking information. I'll focus in the next slides on really the strategy for capAI and the opportunity. Feel free to ask questions in the questions section while I'm talking, and we'll get to them at the end. Okay, so really, let me start with the core idea, our core investment thesis. capAI is really built around 6 investment principles. First of all, we structure AI intellectual property through licensing, and we license before we buy. We have an option to buy once we think it's working well. So this leads to a very capital light operational model. So we put very little capital at risk on any one project, and then we actually go forward. Where do we get the projects from? We work with R42 group. I'll talk about who they are. And we look at 2 major inflection points. One is AI for media, content, and the other is for biology, longevity science. The 5th principle is we use tiny teams. With the advent of AI, you can get huge operating leverage. And the 6th principle is execution. That's me, Ranjan Nag. I've executed across many AI cycles. So in simple terms, we want to capture the upside whilst managing the downside. Now, before I talk about that, and before I explain how we do this, let me just say a quick word on credibility. My first AI system was actually 40 years ago. I've exited to Motorola, BlackBerry, Apple. I'm an adjunct professor at Stanford University, and I've been lucky to be recognized in a number of places, namely the Silicon Valley Engineering Hall of Fame, and also the $1 million Verizon Prize. So I'm not showing this for sort of bragging, but execution does matter. AI comes in waves. The term artificial intelligence was coined in 1956. I started in 1983, and by the way, I thought I was late to the field. We've had numerous waves since the 1950s. Let's talk about this wave. This wave is really, we're looking at certainly AI and AI applications is moving at a infinite speed, infinite cycle. but biology is also increasing at a AI-powered moment. In biology, you have sort of trials that you have to do that sort of slow things down. But AI has really dramatically reduced the cost of building companies. So before you'd have a company with one project, one product. The whole thesis of capAI is that you can have multiple products, multiple companies within one holding company. Tools that used to use hundreds of engineers to operate can now be built with one person, 2 people, 3 people, that order of magnitude. We're seeing 10x, sometimes 50x differentiation in the ability of to actually build things. Now, at the same time, longevity science, you know where the puck's going to be, is also increasing in activity. We're understanding how diseases work. We're understanding how aging happens, and our prediction in the next 2 or 3 years, going to where the puck is, longevity, we like AI will be. And when these two forces combine, new kinds of companies are now possible. So this brings us to how capAI operates. We have a platform model, and we source innovation through R42 group. We structure every deal with R42 through a license and an option to buy. We validate whether the product or project is going to work. And so we validate with a very capital light infrastructure, very capital light use. And then if we think it's going to work, we buy the IP. So if the option to use it, we take over the costs of running it because it's very, very low cost. And then if we like it, we then buy the IP to use it. So we don't rush to buy assets, and we don't build heavy infrastructure, test, structure, and scale. This is all in the AI, and then it's now possible to actually do. So R42, I've mentioned that a couple of times. Who are they? What do they do? Let me explain, because it's key to sort of funnel ideas, funnel projects to a public entity structure. R42 is a venture fund. It's a private structure, but also has a research institute that invents its own ideas, and it's focused on AI and longevity. So we have exclusive frameworks with R42, and we end up with a license and then an option to buy the actual intellectual property underlying that license. R42 develops and incubates early stage AI projects. And so we have an agreement with R42, capAI R42 Alliance. And what that means is we get access to curated technologies, research, but instead of buying everything outright, instead of investing up front, we let R42 do that to make their investment without taking the full risk. And so you can think of R42 as the innovation engine, and then capAI is the public entity to take things on the liquidity framework. So this is important for the capital allocation framework. capAI is not a media company. It's not a biotech company. Rather, think of it as a capital efficient AI platform structuring optionality in both. So we have options into work in both. Both of these are very risky segments, but we reduce the risk by being able to cherry pick the things we want. And so we focus on IP control rather than the actual infrastructure itself. Stage the investment with gates. Do we want to put more in, pull back, and yet still have an option to buy the underlying intellectual property, protect the balance sheet, have extreme discipline, and we only scale once the validation's happening. So you put small amounts of money to make it work, improve the operations, improve the product, and then when we think it's working well, then we want to sort of double down, triple down. So this gives us a very high operating leverage model, and that's what differentiates us to be able to be capital efficient in multiple areas. Let's see. So we have two divisions, Cap Media and Cap Medicine. So Cap Media is really our content-based AI property. It focuses on AI-driven intellectual property. So we have Author 42, which creates publishing IP. We have Movie 42 that extends it to movies, and then Game 42 that thinks about interactive media. But the key is monetization. So we license, we create, we license, we sub-license, and we avoid heavy capital expenditure, and then focus on recurring economics. So you get money every month once we're licensing it to other people. So it's about leverage, not overhead. So Cap Media portfolio, we have several projects in play and released. So Author 42 is the first one, which creates a book, helps you use AI to co-write a book. We have Game 42, which will turn a book into a game using AI. We have Movie 42, which will turn a book into a movie, starting off with movie trailers. So this slide shows how the ecosystem fits together. You have IP creation, you have cross-format monetization. So once you've built one piece of IP, you try and apply it to other formats. And the opportunity is that you can actually dramatically reduce the cost of producing high-quality content. We're looking at 10x, maybe 100x. We're getting to content that's going back to as easy to build as using PowerPoint. And you can think about that generation going from draftsman to PowerPoints. We're going to see that in the next couple of years, and we're building the underlying properties to do that. We're building properties to actually help market this as well, the AI growth hacker, to actually create this, which is a product on its own right. So that's Cap Media. What's Cap Medicine? Cap Medicine applies the same structured model to biology. Biology is notoriously risky. And so Cap Medicine is a platform for developing AI-enabled biological ventures, life science ventures, and particularly in the area of aging science. And each venture we evaluate in a capital light sense. Used to be, the number that's out there, it costs $1 billion to get a drug out. That accounts for all the failures. If you have AI, we won't fail as much. So that's what's happening in the next couple of years. We evaluate it optionality, whether we want to buy the actual underlying IP, and we only scale it after we've validated it, after people are using it. Again, disciplined exposure to high upside areas. These are some of the riskiest segments. Media, you probably saw it, when you make a movie, extremely risky. Biotech, extremely risky. How can you make it unrisky? So part of it is structured, disciplined optionality to buy the IP, use the IP, and low capital cost by using AI. Disciplined exposure to high upside areas. So the portfolio, we have access to AI research tools, genomics capabilities through R42. This gives us exposure to the future of AI-driven biological discovery without being a fully integrated biotech operator. And so you can get access to these businesses that normally would be difficult to get into as a private individual, but through a liquid kind of scenario. And how big are these teams? These teams are tiny. Typically sub 10 people, 2 or 3 people through on a per product basis. One of the biggest shifts in this AI cycle, what is that tiny teams can do that big companies can do. You can see in the broader stock market, that's even affecting traditional public software companies. Tiny teams equals operating leverage. It means lower fixed costs. It means we can iterate quickly. Once something works, you can start moving into it. If it doesn't work, switch it to something else. And it's a higher intellectual property yield for every single dollar we deploy. And of course, reduce the execution drag in terms of you don't have to manage people, you don't have to look at other infrastructure things that you have to build up into your company. So this allows us to really pursue the most riskiest innovation segments while protecting our capital. And so how can we actually manage our risk? Let's look comment on that. We license before we acquire. We validate before we scale. We stay lean, and we also maintain a transatlantic footprint. So here in Silicon Valley is one base, and the other base is in the UK. Common language, common alliance, and so it's not a binary bet model. It's staged exposure, portfolio risk. So we have a portfolio diversification to manage our risk across the portfolio. So let's see why, and finally we have repeated exit leadership. Now, I've had experience in exiting many times, both through my own companies and my investments, and that reduces execution risk. Execution you still do. You still have the ideas. You still have to invest in the IP. You still have to build it, but you still have to execute and actually get to exits for each of these entities. Now, why now? Why capAI now? Why should you be thinking about it? We're living at an inflection point right now in society. Society is going to be changed at the most rapid scale right now. The ability to create companies, the cost has dropped 10 times, possibly 50 times. What can be done with 30 people can be done with 3 people. Content creation disruption is accelerating. We see articles every day about the movie industry, the creative industry, worried about will they have a role. They will have a role, but it's going to be very different. Just like we don't have people drawing cartoons by hand anymore, and that's been replaced with computer graphics systems, we will also have new tools that you can go straight from idea to movie, straight to idea to production. We've seen the same activity in biology. Longevity research is accelerating. And these micro teams, they are AI enabled and get venture scale output, and disciplined capital structures in AI remain rare. You can probably read about how many billions of dollars, hundreds of billions of dollars have been spent in every area, but the application area is yet to be built. If you look at the internet and look at through history, internet was the foundational layers. They all did well. The Cisco's of the world, they all did well. But the people who did really well, people built applications on top. We're now in that phase, and that's exactly where capAI field is playing, and we're playing in the area of content creation and the area of biology. They ideally, someone could say that they're the most riskiest segments, but we make them unrisky. And if you want to contact me, you can contact me personally at my email address. capAI is, to summarize, is a publicly listed AI platform, still at entry level. So it's still cheap enough for you to get in and get all your, get in on the ground floor. We have structured optionality for every project we do. We protect capital. We leverage tiny teams. And we've got this concept known as asymmetric upside. So across both the media segment and the longevity segment. That means we get disproportionate upside for low downside risks. So even if a project doesn't work, we haven't spent very much. And if it does work, we can actually double down and scale. So thank you very much. I look forward to your questions. You can go to our website in between, but Now we can actually go through some questions. So let's have a look and see what the questions we have. Let's see. Okay, look, quite a few questions here. Let's say, let's see. Right. Okay. One question. You've just completed a fundraise at 1 penny with director participation. What does that say about management's internal view of intrinsic value versus the current market cap? And how should new investors read that signal? So let me be clear. I do not take a salary at this point from capAI. My entire compensation will be on the stock growth. So much more than that. Not only do I not get paid, I actually pay the company. I've just invested into capAI at this level. So I'm voting with my mouth, but also my feet and my dollars. So that's the investors can read that how they see fit as any potential signal. Let's see. How would you describe the ideal shareholder base for capAI at this stage? Are you targeting long-only small-cap funds, AI-focused specialists, or retail investors who understand multi-vertical platform stories? I think all of the above. All of the above. It's horses for courses. We're at the entry level of when it's a ground floor investment, but still a public entity. So it has liquidity. So it's very unlike a venture fund. So people could invest in the R42 venture fund, for example, but that's locked up. Venture funds are locked up. You won't get your money out for several years. So capAI is the kind of equivalent but liquid version. So if you change your mind, you can sell the stock. Conversely, if you want to buy the stock, you can buy the stock. You can change your mind every single day. And I think, are we targeting investors who understand multi-vertical platform stories? I think this is sort of a newer area. I mean, I think in the internet era, there was a company called IAC, which sort of built different properties in different areas. You see other more on the venture side, which SoftBank venture companies build things in different areas. This is really a public listing version to do that. Let's see. Another question here. Given your footprint in the UK and Palo Alto, how do you see capAI position itself within the broader AI ecosystem? Are you aiming to be viewed more as an IP factory, a platform company, or a strategic partner to larger incumbents? So I think all of the above again, but different emphases. So we are a factory, but a factory usually demeans the products that are being made. It feels like they're commodities. This is really the IP by definition is not a commodity. Intellectual property is a differentiator. It's a differentiated entity. But we're trying to create underpinning support structure so that these things can be supported on a wider basis. So, for example, the AI growth hacker that we're building, for example, which is a product in its own right, but it's a product that our other products can use as well. I think we can be in that way be considered a platform company. Our expectation is that we will have strategic partners for each of these properties. Big pharma, big tech, big industry. You can take pot shots at them, that they're not up to date with the AI, et cetera, et cetera. But what they do have is incumbency. They do have installed base. They do have being able to actually put their infrastructure, and that's a good complement. We have to build lean and mean teams that can duck and dive, can avoid any bankruptcy in their own levels, and be able to pivot because they're not spending very much money. And we have lots of those. So we have portfolio diversification to go forward. Let's see, is there any more newer companies? Let's see. If execution goes well over the next 12 to 24 months, what are the key milestones you would hope the market starts to recognize in terms of re-rating the equity, revenue scale, number of active platforms, strategic deals? I think in area of big tech, in the area of big tech and AI, you see these sort of large numbers popping out. So many of these AI companies are actually losing money, losing billions, even though they have large amounts of revenue. I think so they're valued on actually the technology themselves rather than the revenues and the margins. I think that what we'll be looking at is as we see these ideas popping up, the story popping up, that will be big milestones. So I think the number of active platforms will be key. We hope to get some strategic deals in the next 12 to 24 months. That really shows validation of what we're doing, and then what we're actually and how we're actually making progress. And of course, revenue and pricing. Now, a lot of these deals, sometimes you have to sort of build the base on free access, free usage, and once you've got the base, then you start charging. So that might be not so much of a milestone that people will be looking at, but really, do these products actually work? Do they actually have utility? And being able to do these things. Let's see. Where do you see the AI growth hacking tool sitting in the portfolio in 3 years' time? Is your ambition for this to become a horizontal satellite product that could potentially outgrow the initial verticals it was built to support? Yes, indeed. Indeed, I do think that. I think it's a common problem that any company that starts, they end up giving all their money to Meta and Google, and they make money, but the actual company themselves is giving a big chunk of their promotional dollars and essentially their operating profit dollars to actually be a system to reduce their economics. So if we can actually create tools that link people with influencers, link people with ads, and we can do arbitrage pricing, placing ads more efficiently than individuals can, place them in the right places, send out the newsletters in the right places automatically, and being able to do customer support for people, then I think we could be able to do lots and lots of things. Let's see. 2 more minutes for questions. So get your question in now, trying to get as many as I can. If you did not get to my questions, then book a one-on-one or be able to book a one-on-one or send me an email and I'll be able to respond as quickly as I can. Okay, with listings in London and the OTCQB and operations spanning the US and UK, which geographies do you see as the near-term focus for a commercial rollout? And what is the bullish case for global reach if early markets perform well? So clearly the US is the biggest market in the world, and English-speaking countries, UK, of course, where we have a base there, but also possibly other large English-speaking countries like India could generate large usage. So I think those segments, the British Commonwealth countries, Australia, they're smaller populations, but usually very much on the leading edge of trying out new things. Regulatory ecosystem, are there regulatory ecosystem advantages in the UK or US that you believe could accelerate adoption of your media and longevity platforms versus other regions? The UK is much more liberal in biotech, looking at vaccines, for example. The US doesn't like that. But the US is the biggest market. Okay, we're running to the end now. If you'd like to get in touch with me, get to the contact me via email, or book on one-on-one, you'll be able to do that at the bottom of the screen here. Thank you very much.